You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Monday, April 1st, 2019. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Monday. The first is China manufacturing activity rebounds. China's manufacturing sector unexpectedly returned to growth for the first time in 4 months in March, in a sign that a stimulus injected into Asia's growth engine may be yielding results. The Caixin Market Manufacturing Purchasing Managers Index, PMI, rose to 50.8 from 49.9 in February. That was the strongest reading in 8 months. Gains for the private gauge came on the heels of China's official manufacturing PMI released on Sunday, which rose to a 6-month high of 50.5 from 49.2. The data suggests China's ailing manufacturing sector is on a path to recovery, easing fears the world's second-largest economy could slip into a sharper economic downturn. Eurozone factory data overwhelm is the second thing to know today. In contrast, factories in the Eurozone had their worst month in almost 6 years in March, and forward-looking indicators pointed to gloomy times ahead. IHS Markit's March final manufacturing purchasing managers index declined for an 8th month, coming in at 40.5 from February's 49.3, just below a flash estimate, and its lowest reading since April of 2013. An index measuring output change, seen as a good gauge of economic health, sank to 47.2 from 49.4, its lowest since April of 2013. In a worrying sign, Germany's manufacturing sector contracted at its fastest rate since July 2012, while new orders posted their steepest drop since April 2009. The euro was at $1.12.4 at 5:40 a.m. Eastern, not far from a 3-week low of $1.1210 that it brushed on Friday. The third thing to know today is U.S. retail sales and ISM is coming up. The week's economic data should bring further clarity on whether the economy is losing steam or just stumbling through a soft patch. The Commerce Department has released retail sales figures for February at 8:30 a.m. Eastern Time. The consensus forecast is that the report will show retail sales inched up 0.3%, following a gain of 0.2% in January and December's shocking decline. Excluding the automobile sector, sales are expected to have risen 0.4% after climbing 0.9% in January. Later, the U.S. Institute of Supply Management will release its monthly survey on the manufacturing sector activity at 10 a.m. Eastern Time. Economists expect a reading of 54.2, unchanged from the previous month. The U.S. dollar index was down 0.2% at 96.64 after going as high as 96.91 on February, its strongest since March 13th. In the bond market, the yield curve between 3-month U.S. Treasury bills and 10-year notes turned positive again, a symbolic change that appeared to help boost market participants' confidence. The fourth thing to note today is Dow futures pointed to triple-digit gains. U.S. stock futures pointed to a higher open, with the Dow set for a triple-digit gain following the surprisingly strong Chinese factory data. Elsewhere, European stocks jumped in mid-morning trade, with all market bourses across the continent in positive territory. Among national indexes, Germany's DAX was up 1.2%. Earlier, shares in Asia closed broadly higher, with the Shanghai Composite gaining more than 2%. The fifth thing to know today is oil hits a 2019 high. In commodities, the Chinese data also lifted crude prices to their highest level in nearly 5 months. U.S. West Texas Intermediate crude futures were up 58 cents, or around 1%, at $60.72 a barrel, a level not seen since November 12. Prices have also been supported by a 6th straight weekly drop in the number of drilling rigs in use in the U.S. They're now down nearly 8% since the start of the year, a reflection of greater caution among shale drillers in response to the year-end slowdown in the economy. International Brent crude oil futures were at $68.61 a barrel. That's up $1.03, roughly 1.5%. Crude prices have been well supported in recent weeks amid signals that OPEC-led production cuts, as well as U.S. sanctions against Iran and Venezuela, have helped tighten an oversupplied market. Our second story today is from MarketWatch.com. This was the world's most profitable company in 2018. Saudi Arabia's national oil company was the most profitable company on the planet in 2018, according to a new report. Citing data from Fitch Ratings, Bloomberg News reported Sunday that Saudi Arabian oil company known as Aramco generated a whopping $224 billion last year before interest, tax, and depreciation. Apple was a distant second with $82 billion, followed by South Korea's Samsung Electronics, Royal Dutch Shell, Alphabet, and ExxonMobil, Bloomberg reported. An expected initial public offering by Aramco didn't happen last year, but Saudi Arabia Crown Prince Mohammed bin Salman reportedly said in October that the oil giant would go public by 2021 with an expected valuation of around $2 trillion. And our final story today, following up on the numbers from Yahoo Finance, U.S. retail sales unexpectedly declined on building materials. U.S. retail sales unexpectedly eased in February on declines in grocery stores and building materials, which could potentially reflect cooler weather, though also may signal further headwinds for the economy in the first quarter. The value of overall sales fell 0.2% after an upwardly revised 0.7% increase the prior month, according to the Commerce Department figures released Monday. The median forecast of economists surveyed by Bloomberg called for a 0.2% gain. Sales in the control group subset, which some analysts view as a cleaner gauge of underlying consumer demand, also fell 0.2%, missing estimates for a gain. That's after upwardly revised 1.7% increase from the prior month. The measure excludes food services, car dealers, building materials stores, and gasoline stations. And that, ladies and gentlemen, is news you can use for today, April 1st, 2019, your Options News Rundown. I'm Dan Passarelli. Trade smart and have a great week.
The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free one-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.